Last week was end of April, and we saw the funds and the money manager did their things to lock in the fees and the bonus. Having a strong post-earning move from Meta and Microsoft certainly made it easy to get the retail crowds to chase the FOMO. But for the month of April, the overall performance from the market was not that impressive. And now May is here, and another FOMC dog and pony show is set for this week. Will Jay Powell kick off the sell in May and go away exercise by telling the market to expect more rate hikes? Welcome to another S&P 500 analysis. Today is April 30th, 2023. In this video, we'll check the price action of the S&P 500 and the other major market indexes, the market sentiment, market internals, US dollar, 10-year yield, oil, silver, and gold to see what they are telling us where the S&P 500 and the market is headed. Stay tuned. Before Thursday of last week, the S&P 500 was down almost 2% before the salvage operation on Thursday and Friday. And at the end of the week, the S&P 500 ended up 0.87%. Overall, the week, the Nasdaq 100 gained 1.89%, and as the best performer, and also the Dow Jones Transportation was the worst performer for the week, down 2.72%. And year to date, the Nasdaq 100 is still holding a 21% gain, while the Russell 2000 only holding a modest 0.44% gain. Looking at this sentiment chart here, we see that the VIX actually came down and dipped below the 16 level. It closed on Friday at 15.78, but the put-call ratio is still approaching that 1 level. So again, the market participants are being complacent, but they are not risk on. And also, we noticed Thursday and Friday, even though we got those two FOMO days, the up-down volume ratio was not that impressive, although it's a little bit under 3-to-1 on Friday in favor of the up volume. And the advanced decline, the daily advanced decline, there was 1,403 more advancing issues than declining issues. And in the New York Stock Exchange, there were 48 more new 52-week high than 52-week low. After a few days that where the 52-week low outnumbered the 52-week high. And once again, we are still continue to see there's negative divergence being developed between the New York Stock Exchange cumulative AD line and the S&P 500. And looking at the Nasdaq 100, we see the Nasdaq 100 gain 86 points on Friday, and the up-down volume ratio was 2.6-to-1 in favor of the up volume. And there were only 1,333 more advancing issues than declining issues. And here in the Nasdaq market, the new 52-week low still outnumbered the new 52-week high. Although we saw a little bit of a pullback from the Nasdaq 100 in relative to the cumulative AD line, but we are still waiting for this massive divergence here, this negative divergence get corrected. If you find the contents in this video to be informative and useful, smash the thumbs up to help promote this video on YouTube. And if you are new to this channel and like to continue to watch these videos from me, then click the subscribe to this channel and be sure to turn on notification, otherwise you might not know if I have uploaded a new video. And looking at the 11th sector in the S&P 500's performance, we notice that the communication was the best performer with a gain of 3.83% last week. And that's primarily due to Meta and also Google. And then followed suit by the technology sector with a gain of a little bit over 2%. The worst performer was the utility, and it lost almost 1% at 0.92%. And notice that all the defensive stock, including the financial, was negative for the week. If you'd like to see my analysis on these 11 sectors along with the ETF, SPY, QQQ, IWM, go check out my Substack page at smtraderca.substack.com. I put out a weekly analysis of this 11 sectors along with those ETF. Now let's take a look at the US dollar. We see that the US dollar actually came up and got above this 102 last week. then pull back. So I wouldn't be surprised to see a little bit more chopping action down here before it makes its move back up to this 103.80 area or near this 104 level. And looking at this 10-year yield, we see that the 10-year yield moved up above this 3.5 during the week, then it pulled back down to this 3.45 level. So I wouldn't be surprised to see it just kind of chop around near this area here until after the latest rate hike announcement from the FOMC. Then we probably could see it work its way back up to this 3.6 area. And here's a look at the 10 and 2. You see that it is still minus 5.8. So we're still seeing an inversion here. And looking at crude oil, we did see a crude oil got a little bit of a bounce last week at the end of the week and came up to this 76, 78 area. But I do expect it to see it come back down and test this 72 area once more. And looking at silver, silver is chopping around near this 25.5 area. I'm still looking for silver to come down to this area here, down at this 24 level before it makes its next upward move, come back down and do a little bit of a back test this area here. And same thing with gold. Gold has been holding near this 2000 level, but I do expect it to pull back a little bit more and possibly come down to this 1925 area, test this area, or you might even come down to the 1870 or below 1900 and then get another bounce and push up to take out this high here eventually. Now let's take a look at the indexes, but before we start looking at it on a daily chart, let's just quickly review the weekly chart to see how all these indexes been pretty much in a sideways action for the last 12 months or so. Look at the S&P 500. You see that it's been pretty much in chopping around between this range down here at 3,600 and then near the 4,200 level. And same with the NASDAQ 100, although we see a little bit of a peak above this, breaking out of this range in the last month or so, but it's still pretty much still in a sideways action. Same with the Russell 2000. And now the Russell 2000 seems like it might come down and test the low of that range. And here the transportation as well, the Dow Jones Transportation and the Dow Jones Industrial, and also the New York Stock Exchange Composite. So you can see how all the indexes have been traded sideways for the last 12 months and essentially have gone nowhere. Now let's take a look at the S&P 500 on a daily chart here. As you can see that it came down last week as expected to this lower range of the expected move. But what was a little bit unexpected was this pop back up toward the upper range of the expected move. It did not get up there. It was trying to target this 4,200 level. It did come up to close to this top of this balance area. And now for next week, we are expecting to see the upper range to be between 4,250 and 4,237. And on the lower range, 4,101 and 4,080. So the expectation here is still targeting this 4,200 level. So I would not be surprised to see it come up and take out that 4,200. Then we see a sell-off, take it back down and fill these gap here and looking for it to come down to this 3,950 level, pretty much basically near this trend line here. I do not expect the upper range to get hit. That's my expectation. But of course, it doesn't matter what I'm expecting. It's what the market will likely do. And I do see that we probably will get a lot of selling coming in once we tag this 4,200 level. And for the NASDAQ 100, last week we were expecting to look for this gap to get filled. And it came down, almost came down and filled this gap and tagged the lower range of the expected move. Then the other upside potential was to come up and fill this gap. And as you can see, it actually did came up on Friday and fill this gap, but it did not come up and tag the upper range of the weekly expected move. Now for the coming week, we're expecting to see the upper range to be And it's this area here between 13,600 and 13,530 or so. And also at the lower range is between 12,950 and 12,860. So for the coming week, I would expect it to possibly come up and tag this 80% major move from this bull flag type of a pattern here, and also fill this gap here. Then we probably will see a sell off and come back down inside of this range and possibly take out this 12,600 level, essentially come in and test this trend line here and see where it finds support here before it come back down into this area here near the 12,000 area. So that is the expectation on the price scenario for the coming week for the NASDAQ 100. And for the Russell 2000, we're expected the this gap here to get filled last week, which it did. It came down and then a nice pop on Thursday and Friday. We're still looking for the NASDAQ 100, the Russell 2000 to come down and tag this 1697 and possibly eventually get down to this 1642. And for the Dow Jones Transportation, we saw it book this trend line, came down and tested this 13,450 area and got a nice bounce back up and tried to reclaim the 14,000 level. Right now it's bumping up against this trend line here. So for next week, I wouldn't be surprised to see it coming back down and work its way down to this lower edge of this balance area. And for the Dow Jones Industrial, it is still trying to break above this 34,000 level here. Right now, we are looking at the possibility of maybe making a move up here and try to break out of this range and get rejected back down and come down below this 32,000. So last week, it closed at 34,098, just a little bit over 34,000 level. So we'll see. Will it get up to this 34,400? And for the New York Stock Exchange Composite, notice that it came down and tagged this level here at 15,240 and got a nice pop back up and try to reclaim this 15,600. But I'm still looking for this thing to come down and come down below this 15,000 level and check this 14,880 area. In summary, the market participants are still not in a risk-on mode, even though their fear level have gone away as measured by the VIX. We see the S&P 500 essentially at the same level as 12 months ago. The market has spent the last 12 months in a sideways pattern. What has developed is a huge negative divergence between the cumulative advance and decline, and this tells us to be prepared for a huge correction when this negative divergence is being resolved. So be careful and thank you for watching.